In this video clipping, we are going to discuss about the concept of venture capital funding. So before going to the concept of venture capital funding, let us see a first simple example from the news clipping. Recently, there was news about the National Skill Development Corporation. That is National Skill Development Corporation and HDFC Parivartan, they announced that around 10 innovative startups are going to be funded by them. So what this news reflect? Now, startups are coming like a mushrooming level. In this juncture, most of them are ready to fund the startups. Some of the innovative startups are not funded. So in this news, one of the organization in India, that is the HDFC Bank, joined hands with the National Skill Development Corporation, is funding to the startups. So the purpose of venture capital is funding the startups. That is the core aim of the venture capital funding. Based upon the simple news, you have to understand that why there is need for venture capital funding. The outcome of this concept is how you can get the funds from venture capitalist, what is the meaning of venture capitalist, how we can utilize that one. Okay, so simple thing. In this example, HDFC Bank is said to be the venture capitalist, and there are a number of startups. There are 10 startups. HDFC Bank is providing the capital. That capital is called the venture capital. So, what is the meaning of venture capital? Now you can understand. The seed money or the first capital given by the venture capitalist to the startups are called as the venture capitalist. That is the beginning money. We used to call it as seed money. Otherwise, we used to call it as even the first investment for the new startups. That is the meaning of venture capital. Let us see another example. How these venture capitals are used in case of the startups. Here in this picture, you are seeing 4 persons. That is Utkarsh, Harshad, Ashwini and Anubhav Bhattacharya. What these people are doing? These 4 people joined together and created a startup. Their startup name is called Able Credit. And it is an AI-based credit underwriting. These startup people, these 4 students need capital. So what they did, they went to the venture capitalist and projected their business, how their business will work in future. And they projected in a Shark Tank. And finally, the Mirac Ventures, which are satisfied with their business proposal. Business proposal here means starting an AI-based credit underwriting. For this one, they are given rupees 25 trillion. So, startups are these 4 students, and their startup name is Able Credit. The venture capitalists are Mirac Ventures. Venture capital fund is rupees 25 trillion. You have to understand the concept beyond the venture capitalist. Venture capitalists are the persons who are funding for the startups. In this example, Mirac Ventures are the venture capitalists. The startups are these 4 students. The name of the startup is Able Credit. And the amount of capital is 25 trillion rupees. So in venture capital, there are 2 persons involved. One is called the venture capitalist who are funding to the startup. Another one is the person who is receiving the venture capitalist. That is the startups. So that is the simple concept beyond the venture capital funding. Usually they are involved in 4 different functions. First function, providing the capital.
Since they are providing the startup capital at initial stage, they are called as venture capitalists. Second one, financing newly and rapidly growing companies. They used to identify which company will go rapidly. Only for this organization, they are funding. You have to project. If you are running a startup, you have to project clearly that your organization is a rapidly growing company. In our example, they clearly mentioned AI-based underwriting. It is a rapidly grown company, and even it is growing now. That is why they have provided the fund. Next one, these people may give equity securities for the venture capitalists. That means they will say that we will also participate in the funding. That is, for some money, 10% may be given by the startup people, 90% by the venture capitalists. That is called equity securities. And they will also provide some technical know-how to the startup for developing the new products. Here, in this venture capital funding, what we discussed, these venture capitalists are ready to provide AI-based solution. So they will also join hands with the startups and provide the new product service. Finally, they will also participate in the management. A startup persons may need management facilities from these venture capitalists. Venture capitalists can also provide these type of participating services. So, simple thing. In case of venture capital, they are not only providing funds, they are providing the technical services also. Let us see the different stages in case of venture capital funding. In case of venture capital funding, there are around 5 stages. First stage is belonging to the seed money. When you are starting a new business, you need seed money. The first money to start your business, that is called seed money. So first seed money will be provided by this venture capital. Once they are satisfied with the seed money, they will wait for another 2 months, how these people are progressing. Once these people are progressing well, that is the startups are progressing well, then they will give the startup money. Startup money means first funding for expenses which are associated with the marketing. They have to create some brand name and showcase. For that purpose, first money will be provided, that is called the startup. Once these venture capitalists are satisfied with the startup money, that is the first round of funding. It is a very big amount, usually in crores and crores rupees. That is for creating a manufacturing hub or for the purpose of product development, a big manufacturing unit. That is the first round. Second round, once the startups commence their business with the manufacturing unit, then they start turning into a profit. By the time, second round of funding will be provided by these people. Once the second round has been provided, now the business started. The profit comes. By this time, if they wish to expand their business, they used to give mezzanine financing. Mezzanine financing means both equity financing and debt financing. That means both loan funding as well as the own funding. Loan funding is called debt financing. So, in the third round, they will get both debt financing and equity financing. Fourth round, the startup name comes to an end. Now the startups are set with the business. They are entering into the IPO. IPO means initial public offering. Till going for IPO, they are called startups. Now the business flourished. They wish to list their business in stock exchange. It may be Bombay Stock Exchange or National Stock Exchange or even global stock exchanges. If they wish to move to that places, they need huge fund support. That is called IPO. Once the IPO process started, the funding comes to an end. For the beginning stage, preliminary expenses will be provided by the venture capitalist. So these are all the stages in case of venture capital funds.
So usually here in case of venture capital investments, it starts with fundraising, then investment in number of stages, even incubation stage. If the startups need an innovative product, that is the incubation stage. Then once the fund has been provided, they will get back the investment, that is the capital gains. Finally, it will be distributed. The profits will be given to different people. Very good example is the Flipkart. Flipkart, the fund has been given by the Tiger Global. Then once the Tiger Global provided funds to the Bansols of Flipkart, then they decided, okay, Flipkart started growing. Then they need investment for acquiring small business. Then incubation stage, Flipkart decided to create a new competitive model for Amazon. So by this time, Tiger Global provided 24 crores. Then in 2014, the Flipkart was in top position. By that time, they wish to share the gains. And once the Flipkart entered into the very huge profit, the profit has been shared and taken over by the venture capital. Of course, later on, the Flipkart has been sold to Walmart. By that time also, this Tiger Global initiated the talks and negotiations. So in each and every stage, there are some risks associated. Say, for example, first stage, when the venture capital is ready to give the seed money, the risk are extreme because nobody knows whether the product will be successful in the market or not. Second stage is the startup stage, another risk, but somewhat less than the previous one. Then the first stage is also high. Second stage will also be high. Only if the funding is coming on the third stage, that means the business is growing too much and it obtained this maturation stage. By this stage, now funding is less and amount of fund will be high because the risk will be medium. Once the business started growing, the risk will be less. Also, the investment will be high. That is how the strategy of the venture capital is going on. So, venture capital is based upon the risk. If the risk is less funding. If there is no risk, the funding will be huge. Or if the venture capitalist identified that this company will have a very good profitability in future, they will get huge amount. Say, for example, in case of Ola was initiated by the Bhavesh Agarwal. The venture capitalist clearly identified this is the first one coming to India. Definitely, it is having a very huge growth. So, in the third stage, the Ola got 50 crore investments. That is based upon the growth. Understand? If the risk is high, funding will be less in the initial stage. If the risk is less and the potential is high, the funding will also be high. That is the strategy beyond the venture capitalist. Usually it is in the form of equity, loan, sometimes even the income sharing basis, or in the form of debt. These are all the funding system. The venture capital will exist when the startups are converted into a joint stock company. That means when the startups decided to go for IPO, that is initial public offer with the stock exchanges, after that, there won't be any funding from venture capital. So this is the concept of the venture capital funding. Of course, let us see what is happening in India. In case of India, the venture capital funding was started in the year 1987 by IDBI, Industrial Development Bank of India. Same year, the venture capital came into existence. They provided around 1,200 crores. That was the initial stage in India. And these venture capital funds started growing. Then ICICI came into thing. Now SIDBI, Small Industries Development Bank, all these people are now coming into the venture capital fund to provide funds to the business. That is for the startup. Even state government. In case of India, Punjab Infotech Venture was the first one initiated by the government of Punjab, followed by Gujarat and Kerala. Even the public banks like State Bank of India, Canara Bank, they are initiating this type of venture capitalist. Another example, some private sector. You can see the ILFS, Infinity Venture, they are now permitted in India to provide venture capital. And overseas venture capital is also there. Very good example is the HSBC private funds, Walden International Investment. These are all providing nice money for the startups. And very interesting thing, Bangalore is said to be the startup capital of India. Only in Bangalore, these people are getting more venture capital fund. And at present, the venture capital in Bangalore is growing at the rate of 50%. And there are few private people are doing nice business in Bangalore. Very good example, Bloom, Secure, Kalari Capital, Axel. All these are really very good example of the venture capital. Recently, one survey shows that the venture capital in India is moving towards $39 billion. And that is a very good one. After this pandemic, once again, the venture capital investment has been increased. How you can get the fund from venture capital as a student? Now there are a number of things. So if you are doing business or if you want to do a startup, you can participate in the Shark Tank. Actually, this Shark Tank was introduced by the business reality television series in the initial stage. If you want to do a business, you can take your business proposal and produce in front of the venture capitalist. They are called the sharks. Sharks means investor. You can project how your business will do. If these sharks, that is investors, are satisfied, then they will give the funds. That is the concept of Shark Tank funds. Shark Tank means these people provide investments to the startups. So understand that is the common one in India, Shark Tank participation. If you are having the business proposal, take your business proposal, showcase to the investors, and if they are satisfied with your proposal, definitely you will get investment. That is the practical thing you have to understand. So as a summary, you must know what is the concept of venture capital and what are the stages involved and how to get the money. In my view, make your offerings viable. Get